And then the key challenge with financial repression is, if you hold interest rates lower than they should be, it opens your currency to a speculative attack. So, like, let's say Turkey, for example, they went this long period and they had very high inflation. They were holding interest rates low. So, if you're a global entity, you're like, well, I'll borrow Turkish lira then, because they're growing the money supply so quickly. Their interest rates are low. I can buy Turkish lira and I can buy almost anything scarcer than that, or anything that gives me a good yield, and it's a good trade. So generally, they combine it with some degree of disincentives or outright bans on borrowing it for that purposes. But then also that also reduces the attractiveness of that market to global investors, because like, well, if that market's going to, run financial oppression and capital controls, why would I want to keep capital there? And the biggest countries generally have more runway for getting away with that, because there's more reasons why capital wants to be there. Like, all else being equal, capital wants to be in the US more than it wants to be in Turkey. So the US can kind of get away with more, restrictions or more incentives against, like, basically things that make it hard to do a speculative attack against its currency. But around the margins, it's still there. And to some extent, that's what we're seeing in, like, the right now the big topic in Bitcoin is like these leveraged Bitcoin companies where they just take out debt and buy Bitcoin with it. Because it's like, if you can take out 5-year debt at pretty low interest rates and buy a scarce asset that historically goes up, by massive percentages, that's really the same thing as, like, say, making a like borrowing in Turkish lira and buying a better currency with it, or buying gold with it. It's kind of the same play. So eventually, you might see a crackdown on those types of activities in various jurisdictions, and basically attempts to reduce how much global capital players are able to arbitrage as currency. Um, but right now, a lot around the margins. A lot of this is pretty soft, because it's just inherently harder to do that to the biggest markets that matter.